Hello everyone, so today we're on to the 4th week of the Tesla challenge and time is passing us by. It's already 4 weeks into this, and of course there's many weeks to go, and we'll see how the results go at the very end of probably 12 months. So you know, we're in the first month really, so another 11 months to go, but so far so good. I'm happy with the results so far. I haven't really actually had to think about it as much as I thought I would. I just put the order in. Originally I thought I was going to be more attentive to it, but I haven't actually been that attentive. Like, Tesla share prices continue to just move upwards, but it doesn't matter to me. Like, I just buy at any price, and so far it seems to be working. But of course, I mean, I'm buying as the price continues to move up, so of course the portfolio is going to look a lot nicer. Let's just go check out the portfolio. Yeah, so now you can see the portfolio. It is at $464, overall contribution of $400, as it is $100 every week, and so far so good. We're 16% up. If I put this type of money into the bank, I wouldn't be getting much, to be honest. Maybe like $4 for the whole year, where this is already on 464 for a month. It's so far working well because Tesla's just gone up really well, so hard to lose money on Tesla the way it's moving lately. But of course, this is an approach to go, does this work for the long run? And if it works for the long run, we can go into this approach in a better, bigger way in the future. At least it's something that I would consider. Like, I read enough of these things in books. I know it works for the index approach, but I don't know if it works for the growth stock approach, because no one's really like gone into it this way. Like, there are people that you know, consistently contribute to stocks on like a weekly basis, but I don't know if they've ever done that for like a growth stock. People do it with dividend stocks. It's really popular with dividend stocks because you know, you're going to get a certain amount paid to you regardless. You know, every 3 months, 6 months, or every 12 months. Some cases every month, which tend to be real estate stocks. But generally it's dividend related. Not a lot of people generally do it with growth stocks, so hence why I've decided, hey, I need to see the results for myself and I want to give it a go and see how things go. You know, it's also something you guys can try. Like, I mean, if you don't have anything like saved up right now, the best way to start is actually this approach, because you can start investing and you can just start to get the feel of it. And because you're buying regardless of price, you're not that worried about price, because a lot of people seem to have a difficulty in valuations. They don't know what price to buy at. But the one thing is, they know it's a good company. If you know something is a good company, you know the future is going to be phenomenal, then this is the type of approach you take, and I think it's going to be beneficial as you go. Like, as we can see, like the stock price is 568. When I first started this 4 weeks ago, it was around 400. So the stock price has moved up significantly, quite a bit. So yeah, I think in the scheme of things, you could look at it as, if I brought everything at 400, it would have benefited me more. But maybe if I didn't have that 400 then, that's a big question. Like, you could have brought a lot when the price was lower, but at that time I didn't actually feel the price was that low. It's only low in the sense that we look at today's price. And how do we know today's price is high or low? Is 568 low or high? Again, we're at that situation where I'm tested around the price where I feel like it's trading at such a high premium that sometimes it would make a hard justification for me personally to buy all into the stock at this kind of pricing. So that's why I take this approach, because I can get past it. Now, I can look at the price and not feel that bad, or not any, like, I don't really feel that emotional about this price. Like, I look at it and I go, it's up, and I'm happy because portfolio is up, but it's up, and next week I have to buy at this price. So like, I'm on both sides of the fence, so hence I'm very neutral, regardless if it's low or high. You know, it benefits me in one way or the other. and is also disadvantaged one way or the other as well. So I think that kind of just takes the emotion out of it, particularly if you like a stock, particularly the EV stocks. Like we all know EV stocks have done so well, but the price just trades at such a high premium that I think I kind of had this thought at the start of the year where if I was like, if I allocated an even amount into every stock that was in the EV category, then potentially you just let it run and see how things go. I didn't quite distribute evenly for them, for all of them, but I did buy some. And yeah, I think if I did take that approach, I would have been benefited in a much bigger way than I would have had right now. But I mean, that's kind of different, because I was looking at, say, Neo, and I was thinking the stock's going to do well, but I wasn't sure if Li Auto or Xpeng would do well. I knew Tesla would do well. We know, because when people know a stock, they tend to pile into the stock. Any value difference tends to be realized, because people look at a stock and they go, at the slightest chance that it could be cheaper, we're going to buy it. And that's the biggest difference when it comes to stock investing. That if you invest in a popular stock, the value that you can get gets reduced significantly. Whereas if you go and hunt for a stock that could be undervalued, you could get a significant upside, but be prepared that you'd be holding for a much longer time frame as well. And the recent one I was looking at was like BlackBerry. This stock could do well in the short run, but I don't think it's popular enough to jump up too quick in the short run. I think it's going to take a bit of time. It has to prove itself in terms of its growth. Right now it has no growth. So that's the situation with BlackBerry. But based on the future that I see for BlackBerry, I would think of a similar approach, is that it kind of misses a fundamental thing that Tesla has that it doesn't. Tesla has growth, it has profits, it has, stability, whereas BlackBerry it doesn't have that stability that you would want, because it's still growing in this unproven area in terms of its financials. Like, it's proving some financials, but we haven't seen the growth behind those financials, and they aren't growing. Like, the predictability based on the past results just aren't there yet. We could wait to next year, where I think they will start to do really well, and then if we saw them doing well next year, then I'd say then you could take this approach with something like BlackBerry. But until then, BlackBerry is still unproven, even though it's got this monumental potential going forward in the next few years. You have to look at something like that and go, would it be good for this type of scenario? Would it be good for this type of challenge? I don't think BlackBerry would be, but I think, it could be in the next year or two. So I think that's the difference between how you want to pick a stock for something that you invest in weekly. You just don't pick on based on potential alone. You have to pick one that has sustainability behind it, and the really strong fundamentals that, regardless of what happens, it's always going to be, very, very relevant going forward. And I think that's the thing with Tesla. It's just proven itself to be, at the forefront of EVs, that if hiccups happen, they would recover, and they would continue to just propel themselves forward, and they would continue to build really good value for shareholders. And that kind of is what I want in a stock. So that kind of gives me the confidence to continue buying regardless of what price. If you've got any questions or comments, feel free to let me know below. Until then, good luck investing, everyone.